What we're going to do today is just take a look at this correction that we're in. Hopefully people that have been following this channel aren't too surprised by it. We've been warning everyone that December should be a volatile month. We definitely have a bounce, which FOMO kicked back in, and we were quite cautious. We continued to put our hedges on early this week and late last week in preparation for this next move down. So we're going to get into what that would look like and what to expect going into 2023. Hello, everyone. Knox Ridley here, portfolio manager with the IO Fund. This is our weekly broad market check. And what we're going to do today is just take a look at this correction that we're in. Hopefully people that have been following this channel aren't too surprised by it. We've been warning everyone that December should be a volatile month. We definitely have a bounce, which FOMO kicked back in, and we were quite cautious. We continued to put our hedges on early this week and late last week in preparation for this next move down. So we're going to get into what that would look like and what to expect going into 2023. First and foremost, the October 13th low, the structure of this move off the October 13th low, it says be cautious. You can kind of visually see there's only about 1, 2, 3 waves off of that low. And then this move right here, you see how it's gone into the territory of that first wave up? It's just telling you this is cautious. What we want to see is a steep move up at a 45-degree angle, roughly, in a 5-wave move where they don't overlap like you're seeing. And because of this structure, I think it's wise to be prudent. I think that whether you believe that we are in a bear market, of a large degree bear market bounce, or a new bull market, they both are assuming the next move is going to be in the same direction. So I think it's wise to assume, to play it cautious and just to really focus on the next move. And once we get to that next place, then we can start managing risk accordingly. But this is the path, the two most probable paths I see playing out. We'll call it our red and our blue. And they're really different iterations of the same path. So basically, the big move is this was the first leg in this upward move that I think is in play. We're in the middle of the second leg, which should find a bottom, I think, around 3,600 in there. And that would be setting up for what we believe would be a tremendous buying opportunity for 2023, as we're expecting, a move into the summer up above 4,400 in the S&P 500. This is the range. It could go as high as 49, give us some kind of a double top, maybe even spill over a little bit. It's a very high range, and we'll know more as we approach it. But the important thing is that when we start moving down into this range right here, that's when you want to be deploying your cash, taking off your hedges, and setting up for this bigger move higher. And like I said, whether this is a new bull market or not, the new bull market still has to get to this region. Just as the next large degree bear market bounce will need to get to this region in order to complete. So this is the move that I think makes the most sense for preparing for in 2023. Now this blue count is just a different iteration of this bounce right here. It's assuming that this was the bottom and we're in the early stages of setting up for this push towards 4,400. This move will happen in a 5-wave move. It will be, like I talked about, a 45-degree angle roughly, no overlapping, very powerful move. And it would go in 5 waves. So this would be your first wave. We're in the second wave, which, if true, should find a bottom here around 3,875, 3,840, then turn back up and break out above 4,015. Now, if that happens, if we do find a bottom today, early on next week, and then turn back up and break out above 4,015, take off your hedges, go long, because that's telling you we're in a breakout situation right there. That's a breakout move, and you don't want to miss that. That's why it's so important to follow price action as opposed to news. Anyway, long story short, what I want you to focus on is 3,840. If we break down below 3,840, then we're heading down towards this red box, which is 3,732 at the minimum and 3,650, I would say, at the maximum. And if we break below 3,650, then we're really in trouble. Something else is going on. Our plan is to stay hedged until we get signals that something is playing out. So we're not really sweating this move down. whatever plays out, we feel comfortable just waiting to deploy our cash. So the reason why I'm assuming this is what's playing out right here, I'm going to get into that right now, is if you look at different markets, all markets talk to one another, and there's always a leading market. Most people aren't following Europe, but Europe has the same problems the US does, plus an energy crisis. They're in a much worse situation than the United States. And this is the Euro Stocks 50 index. Just a combination of your blue chips, like your Dow Jones for Europe, basically. And look at this move off the October 13th low. This is what we're talking about in a bullish move. You see clear 5 waves. They don't overlap. It's at a roughly 45-degree angle. This is bullish. This is the bear market trend line right here. Broke out, retest held, and pushed higher. Now, this is long-term bullish, in my opinion. This supports the thesis that we're setting up for a big move in 2023 in the upward direction. However, what follows a 5-wave move is a 3-wave pullback in the same degree. So this degree, what I mean by that is this was about a 3-month uptrend. So we should be looking for, I would say, minimum 3 to 4 weeks of a downtrend that should take us into this region right here, maybe a retest of the bear market trend line, maybe a spillover. But this is telling me, Europe is telling me that something more than just a dip and go is setting up, right? Which is why I'm supporting that red count in the S&P 500. If we take a look at the dollar, I track the dollar index only because I've been doing it for so long, and there's a lot of price history to analyze. So I don't really want to get into their better indexes to track. They tell me the same information, and that is that the dollar peaked over here in September. And since then, we have an A, B, C downtrend, and the C wave is a 1, 2, 3, 4, 5. And you notice how this 5th wave down is happening on less momentum. This is a very stretched piece of this correction. I think it's the first leg in a much larger correction, but what follows this first leg is a corrective move higher. And once we get above 103.4 and DXY, then we are in that corrective move, in my opinion. And think about it this way: what's been the correlation with equities and stocks is that as the dollar goes up, there's more fear in the market, puts more pressure on U.S. equities, and they go down. And so we've had a nice little relief from the dollar going down, but we're about to get a return to an uptrend, in my opinion, that should be corrective, and it should hold this high. It could even go higher. But what that will tell you is that fear will return to the markets. There might be a flight to quality. I don't know what will be the catalyst, but it's lining up with what we're seeing right here, a bigger pullback than most are maybe expecting right now, just like Europe and the dollar. Another stock that I track is Caterpillar. I track multiple stocks. There's always a leading stock that can give you clues on what's playing out. And Caterpillar has been a phenomenal leading stock to follow, for many, many years. And so just show you some of the Gan work that I do. You're looking at a Gan Fan, which just measures angles from key inflection points. And it really shows you can see how these angles have really defined resistance and support. This right here, this red line is the 1x1 line. It's a 45-degree angle, a true 45-degree angle. And it's the most important line. And as you can see, the last few times in the bear market, it has touched this line, it has failed dramatically. Well, it's touching it again right now. So that's one point. And you see this 360 degrees. This was Gan's way of calculating its support and resistance. And you notice how the COVID low stops right on a 360 degree right here. And these count rotations. So 1 rotation, 2, 3, 4, and right again on that 360 degrees. So we have 2 very significant price resistance points coming in where price was coming in and touching them. And it was happening on decelerating momentum. The other thing is you see this shade. Gan was the master of cycles. He was, and it's incredible what he was able to figure out. But these basically mark inflection points. And what matters with these shades is how is the market trending into it? If it's up, you tend to see a reversal, right? I mean, it's really been very significant in calling some major tops, but also some minor just swing lows and tops as well. So it has a very good track record of telling you when to expect some type of a reversal. And not only is the price hitting these price points, these resistance zones, but it's happening in the middle of one of these cycles. And that tells me that Caterpillar is setting up for bigger than just a minor dip and go. If we take a look at Caterpillar, what's interesting is this is the COVID low. We have 1, 2, 3, 4, 5. with 5 waves off that COVID low, we were expecting Caterpillar around here, anyone that's been watching this channel for a while, to make a new high. So what follows 5 waves is a deep retrace. Now, the way that I count this is how it makes sense to me in lining up. I don't think that the market's setting up for a continuation of the bear market right now. If that's going to play out, it'll probably happen in the summer and at much higher levels. So the only way that this makes sense to me is this count right here. We have 1 wave, 2 waves, 3 waves, and we're setting up for a 4th wave drop, and then one final 5th wave push up into these regions. That lines up with what I'm seeing in the broader market. But the important takeaway here is that Caterpillar is setting up for a bigger drop, just like Europe, just like DXY having a move higher. So multiple markets are telling me that we're setting up for probably a period of volatility most are not expecting. I do expect it to hold the lows. I can see tech making new lows, or NASDAQ 100. I could even see the S&P 500 retesting its lows. The only thing that matters to me, and this has been my theme for multiple webinars that I've done, and multiple of these videos, is as long as the Dow Jones holds this October 13th low, then what's setting up this period of volatility is a tremendous buying opportunity. So anyway, I hope that was helpful. We'll follow up next week. And, we do this kind of analysis on a technical and fundamental basis with specifically the tech sector and some cryptos. And we manage a real-time portfolio where we send out trade notifications, give you this kind of analysis on all the stocks that we own, why we own them, as well as broad market analysis on a daily basis. You can sign up at iofun.com. And if you like this channel, please like it. And hope you have a good day. Thank you.